Now, Cardano whales buy 100 million ADA, but price is still struggling below 40 cents. Well, not anymore. We've obviously come up. We're currently trading at about 42 cents, where we found a little bit of a level. And, you know, I'm hoping that this is the new range, right? That we don't go below 40 cents anymore. But I find it interesting that Bitcoin's market cap continues to pump while Bitcoin also pumps in price. I find that interesting. Night token, on the other hand, has been taking a bit of a dip as Bitcoin's dominance rises. So there's definitely a bit of a correlation between Bitcoin dominance and midnight. A smaller effect as it relates to Cardano. But then Bitcoin is also pumping. So Bitcoin's currently trading at 97,645, which is fantastic. It's great. You can see on all my major charts, I'm always using Market Cipher down below. I'm always using Market Cipher as kind of just the money flow, the RSI, these dots. And then I'm, of course, using the blood diamonds and the manipulation X's that kind of give me a gauge on what's likely going to happen and that what kind of strength. So because you can see here, even though we got, if I'm looking at Cardano's price, the volume candles aren't that high, which typically, if I were looking at that naked, just with volume and price action, I would think, okay, the price is coming down, but it doesn't look like there's a lot of momentum and volume. But then you can see here that this blood diamond popped up, which basically says this is going to be a big drop. And it was, for the most part, respective of the price and the range, it was a pretty significant drop, even though volume wasn't necessarily telling me that was to be expected. So I always keep my markets, I keep very specific elements of Market Cipher in action on my charts because they're very helpful. So I'm curious what this is going to say. Cardano's price holds the 20-day EMA, but weakening volume keeps breakdown risk elevated. Whales added 100 million ADA near support, helping price avoid a deeper sell-off. Here's the thing. Everybody knows, and I know that there's this big conversation right now about Cardano and its status with like the new law that, you know, they're working on, the Clarity Act, and how they're working that out back and forth. And basically all the Democrats appear to be going to bat for the big banks, trying to structure things so that people can't utilize stable tokens in a way that's going to be more fruitful to them, because that would completely just take out the banks, even though they don't really pay shit to anyone anyway. I mean, now they have, what is it? I mean, when did I forget? Didn't Biden push the whole, like, now banks don't even have to have any reserves? It was like 0% reserves. So they're basically taking your money, loaning it out multiple times over and over and over, building this cascade of banking. They're not paying anybody shit, but then they're reusing that same money over and over and over again to generate significant returns. And the banks don't want anything to happen to that. And with the way cryptocurrencies work and stablecoin assets and things, we can very well start generating significant yield through DeFi and other means just by holding stablecoins for the most part. In some cases, the banks want to get rid of that. So you've got one side of the aisle basically saying, no, protect our banks. We don't want them to go anywhere, probably because they pay a lot of money for a lot of the bills and laws and things that are basically all a part of the old school way of doing things, which has put us in the situation we're in anyway. Right. So we really want to get away from that, and we want to move into the blockchain space and utilize these tools and these new financial instruments that are actually going to benefit retail, actually going to benefit the populace. Right. So you've got one side that's all about the populace, and then you've got the other side that's banking for the institutions, right? And so they're basically at war right now, going back and forth with the Clarity Act, trying to find that fine line between, you know, there's some benefit for the people, but we're still protecting our banking institutions. And, you know, to me, it's bunk. It's garbage. Like, really? I mean, it's a frustrating situation to be in, quite frankly, and I'm very curious to see how this pans out. But at the same token, on the same note, the conversation around Cardano is such that it's not a part of any major ETFs yet. I think there are like 16 or 17 ETFs that are waiting to launch. And I think these are waiting to launch as a part of the Clarity Act or like with the Clarity Act's clarity. And then I think these ETFs are going to launch because there are altcoins, like primary altcoins in these ETFs. So we'll see. We'll see how this happens. And I guess a lot is going to happen. I think the PPI data is supposed to come out today, but I haven't checked exactly what time. I'm going to assume it's going to be within the next hour and a half to 2 hours. So we're going to see some volatility in the market, I'm sure. This may be the news that we get that starts basically pulling Bitcoin into a maybe a three-wave down reversal pattern until we start moving back up again. And then likely at that point break 100,000, but we'll see. But the one thing that I know is while all this conversation is going back and forth, as retail continues to sell out of fear, the institutions and the whales are consistently accumulating. They're buying up everything we're selling. And I know some of you are like, well, why can't they just go buy whatever they want? The market's open. Well, because it's easier to wait on the news play that scares people out of their positions, pushes the prices down a bit. And then these institutions are that buy pressure, and that buy pressure is effectively keeping the price of what they've already accumulated to a certain degree up to a certain price point while they're able to accumulate more around that same area before things really start to rip.